Good morning, good afternoon, good evening, everyone. Welcome back to the breakfast show. What is this intro? This is the best intro that you will find on a market open, and no cap, as they say, the young kids these days. So we have some things to talk about. We've had the FOMC meeting yesterday. Everything went well. Everything went well. We actually had our rate cut. Plus we had Jerome Powell that was actually dovish, which again is a rare thing to see. But then we've had earnings report. And unfortunately, it seems like Oracle's earnings report is the reason why we are maybe not going to get a end of the year rally, maybe a Santa Claus rally. Maybe not. I don't know. Seems like it. That's not the only thing. We've had neoclouds that were down yesterday before Oracle reported. They're down pre-market, but everything's down pre-market. We've had Rocket Lab and AST Space Mobile, some other space stock green, very much green. So what the heck has happened? Well, let's maybe first up look at what's going on at the moment. And what's going on at the moment is this. We have Nvidia down 1.5%, AMD down 1.5% as well. And yes, you have Oracle that's down 13.2% right now, which means if we go and look at Oracle's chart, let me pull it up. We are basically close to the previous small bottom. Stock did go under, actually did go all the way to $186 or so, which is just, there was a gap here from back in June when the stock did gap up. It didn't get filled totally. It had got filled maybe 50%. But we're basically at the same price as that bottoming. Are we going to see a rebound from here? The question, right? That is the question. I don't know. And again, we covered this yesterday during the earnings earnings call. It's not like the numbers weren't good. The numbers were okay. It's definitely, let's say, justifying the price right now. From a forward PE standpoint, it's not that expensive anymore. It's not trading in the high 30s, 40 PE. It's closer to let's say, 30, high 20s at the moment. But the problem wasn't this, right? The problem wasn't the remaining performance obligations of over $500 billion. The problem wasn't the fact that cloud revenue is up 34%, infrastructure revenue 68%. That wasn't the problem. And by the way, the EPS beat. What's up, Jose? Yes, apparently I am Jose. So I went from white Amit to now European Jose, and Amit is the forgot. But anyways, this wasn't the issue. The issue was the earnings call. One of the worst earnings calls I've listened to in a long time. First of all, the audio, issues with the audio. Then the answers that we got for certain questions weren't really answers at all. Let me check. My audio is fine. Okay. The answers weren't really answers at all. Suddenly, does it say this right here? Suddenly CapEx is going to be 15 here. Fiscal 26 CapEx is now expected to be approximately $15 billion higher than previously forecasted. And previously forecasted was just 3 months ago. So you're telling me in the last 3 months, suddenly your CapEx expectations have risen by $15 billion. If that's the case, I do hope that they are going to recognize a hell of a lot more revenue. They say here the company also projects $4 billion of additional revenue in fiscal 27, stemming from the Q2 RPO. So extra $4 billion for fiscal 27 equals an extra $15 billion more of CapEx for now. Of course, the CapEx is not just for the $4 billion, but the market, literally the stock moved when this was announced, when they said that it's going to be $15 billion higher on the downside. The stock moved. The stock moved a little bit on the upside when they said, let me see if I can find it. So yeah, when they said this, what I would say is we've been reading a lot of analyst reports, and we've read quite a few that show an expectation of upwards of $100 billion for Oracle to go out and kind of complete these build-outs. And so they're saying that it's going to be less, if not substantially less money raised than that amount. When that was announced, the stock did go up a little bit, but yeah, all in all, that didn't help, and so we are now in this type of situation. So there is a timeline. There is a timeline. It's a timeline that they. Lots of Jose Nils here. It's funny for the people that did not attend the live stream yesterday. They have no idea what's going on right now. But yeah, there is a timeline. 3 months ago, they gave us a timeline with regards to recognizing the revenue all the way through, I think, 2029 or something like that, or maybe fiscal 29 or fiscal 30. So there is definitely a timeline, but the market is more focused on what's going to happen in the short run, not what's going to happen 5 years from now. And yeah, with regards to this, I mean, it's not officially QE, but it's, someone said on X, it's adjusted QE, right? Like adjusted EBITDA, adjusted free cash flow. So this is going to be adjusted QE. I mean, it's probably the start of QE, but right now we are going to call it adjusted QE. And yes, today there is a certain vote with regards to the enhanced subsidies going on. Yeah, the probability of any of the plans, whether it's Democratic or Republican plans, passing are close to zero. So I won't hold my breath on that. And it's probably also one of the reasons why Oscar yesterday was down. Today, right now, pre-market, it's up a tiny bit, but not by much. So yeah, unfortunately, we could not continue the green that we've seen yesterday, right? This was yesterday's close. It was a nice close. Okay, Microsoft got hit a little bit, but all the rest, it was a nice close. And now we are seeing this. The Grinch came in earlier than expected. Yes, the dollar could weaken. Yes, correct. And that's probably what's going to happen anyways. Then let's have a listen to some comments here on the Fed situation from yesterday, and then there are some analyst comments that we can look at. Shift4, PayPal got a downgrade, of course, and a couple of others.
The Fed cutting rates as expected yesterday, but markets read a hawkish cut as somewhat dovish. Steve Leisman joins us right now with more on that. And Steve, this was interesting to watch the market's reaction after hearing this and then hearing Jay Powell speak.
That was the curious part of it. All went as expected, except perhaps the curious market rally that came after. I'll talk about that in a second. Hawkish rate cut, reducing rates by a quarter point to the new range of 3.5 to 3.75, and signaling, hey, it might be done cutting for now. The statement used language it had used in the past to signal a pause ahead. And Fed Chair Jay Powell several times said policy is well positioned, which is sort of Fed code for we're done for now.
I would note that having reduced our policy rate by 75 basis points since September and 175 basis points since last September, the Fed funds rate is now within a broad range of estimates of its neutral value, and we are well positioned to wait to see how the economy evolves.
There's that well-positioned note. Well, the Fed futures embrace that outlook for pricing in just a 19% probability of a cut in January and a 43% probability in March, and then a greater chance as the year goes on. The vote count, 9 for cutting, 2 against cutting, and 1 for cutting 50 basis points. Maybe not as bad as expected by the market. The dot plot, somewhat more hawkish, with 6 officials wanting no change in the funds rate at this meeting, 7 officials wanting no change for next year. But the median claiming that 1 cut for 2026 and 1 for 2027. But the forecast did show an uptick in growth next year with declining inflation, read greater productivity. More dovish, the balance sheet outlook, which Barclays called, quote, a very big Christmas gift. Well, it begins on December 12th. The Fed will begin buying bills out there sooner than the market expected, focusing on bills but could go up to a 3-year maturity, and a total of $40 billion for at least several months, which was more than expected. Now, Powell insisting this is not new quantitative easing. He said these purchases designed for the Fed to maintain an ample supply of reserves in the banking system and provide liquidity during times of strong demand. Call it whatever you want. The stock market seemed to like it. And tomorrow I'll be in Chicago interviewing President and now dissenter Austin.
So he started by saying that he was a bit surprised, right, by the market's reaction. And again, then he goes to talk about all the reasons why the market actually reacted positively, because we got a rate cut, we got a dovish, let's say, dovish Fed, we got this adjusted quantitative easing, we got a better outlook for next year, more economic growth and less inflation. So of course the market is going to react positively because it went against everything that the market thought was going to happen when Jerome Powell was going to speak. Unfortunately, we then had Oracle, we also had Adobe, but Adobe, complete different story. Adobe, good numbers, again, double beat, not surprised, but the stock is not loved right now. And so I think the stock is basically flat. Yeah, it's literally flat at the moment, which is crazy. It did get, yes, a little run up going into the earnings report, but again, it's not like something was priced in here. It's very cheap. But yeah, now we have this story right here, the Oracle one. Interestingly, Netflix is the one that is green today, was red yesterday. Oracle is down. It's taking down a lot of the, if not all of the chip names that we do cover. Pre-market, TSM, Marvell, AMD, NVIDIA, Micron, Intel, Broadcom. Broadcom reports later today. Lam Research, CLAC, Applied Materials, Qualcomm, and ASML, they're all red right now, pre-market. And of course, all the neoclouds are red yet again. CoreWeave was down 2.7% yesterday, down another 4.8% today. Nebius yesterday was down close to 3%, right now another 3.8%, under the 100-day moving average, sitting at $90 right now. I know what I said on Sunday, that I'm not going to buy anything anymore in 2025 unless I see some great opportunities or maybe overreactions. We'll see if we can. If some reason it goes back to $80 or so, I would have to buy more, I think. Applied Digital yesterday down 5.4%, another 2.7% decline at the moment. Iron down 6.2, now another 2.5. Yesterday Cypher, same story, another 3% down right now. Same for Hut 8, although yesterday Hut was up 2.5, but now down 2.8. And Wi-Fiber is down 2% after being down 4% yesterday. And yes, I know some of you like this name, Planet Labs. Planet Labs is up right now. More specifically, they are up 21% pre-market. Planet Labs is up 21% pre-market. Then as for fintech, we have Robinhood and PayPal both down around 2% at the moment. Pagaya is down 1.5%, Bull is down 1.5%, Affirm is down 1%, SoFi 0.8%. Then we have Klarna 0.5%, same with Sezzle. Chime is down 0.1%, but it has had a very good day. Yesterday was up 8%, huge reversal from just below $20. This one was on the radar. American Express got a nice bump yesterday. And then Adyen right now, we see nothing here. The local is up 2.4%. Probably we got some analyst talk there, so we're going to have a look at that. I believe, yeah, nothing else. Visa is up 1.2%. Shift4 is up 0.5%. I don't know why this popped up. Shift4 is up 0.5%. Same with MasterCard, and Dave is basically flat at the moment. So let's have a quick look at some analyst comments, and then we'll go back to some more market talk. Maybe a little bit. Let me finish with the Oracle stuff. And then we'll look at some analyst comments.
Joining us now, Jackson Ader, a KeyBank Capital Markets equity research analyst. He cut his price target on Oracle to $300 from $350 after the company's earnings. Woo, you're still not close to the price, though, are you, Jackson? But kept his overweight rating on the stock. Welcome, and can we go back in time a little bit, because the way that Oracle got to those stratospheric levels, where Larry Ellison was was the richest country on the planet at one time, the stock was much higher after a couple of announcements involving AI that talked about how much they were going to either provide or buy. And talking about it doesn't mean that it happens, does it? Is that the realization that's coming home now to roost?
Yeah, I think so. Yeah, thanks for having me, guys. I would say that was back in September when seemingly the company's cloud infrastructure money was still green. Since then, it's been mostly skepticism, because you're absolutely right, Joe. It's one thing to sign contracts, and it's another thing to execute on those contracts. And when you have a quarter like Oracle did last night, where they miss on some key metrics in the quarter, it's going to bring up questions of execution.
Its backlog that in September, I think it got a big jump to. The backlog of contracts that it got was $455 billion. How much realistically will actually come to fruition from that? Because the stock jumped on that.
Well, it's contracted. So,
yeah, you have an estimate?
I mean, yeah, half? But I don't know. I can't really handicap. It's like, oh yeah, they signed. Now they have over $500 billion of contracted future revenue that is expected to flow into the company in the next, call it, I don't know, 5+, 5, 7, 10 years. I don't necessarily have a haircut on how much that will actually be recognized. I just mean
initially, everyone believed it and didn't question it, obviously, because the stock went up to those levels. Are we seeing a kind of a rolling correction in AI? I mean, this came back to earth, so that probably was a little bit hyped and a little bit of a bubble when it was up above 300, wherever it was. So is that possible, that we could not have one big bubble bursting, but just have things come back to earth one by one?
Yeah, it's funny. I mean, if you look at Oracle's valuation, sure, at north of 300 or dollars on the share price, maybe you could say, hey, we're getting a little stretched here on valuation. But now below 200, you're talking about, I don't know, mid-20s on a forward gap PE basis. It's no longer all that expensive. But if we think about what drove the sentiment shift between September and today, there were a couple of things. One is customer concentration with very well-funded, but yet to be all that large AI startups like OpenAI. And then I would also say it's a massive capital-intensive build-out. It will require the company to raise outside funds. Now, management mentioned last night there's a few things that they can do to lower the amount that they're going to have to borrow. They're committed to the investment grade rating, but still, you're going to have to get a little bit creative if you're Oracle, because unlike maybe a Microsoft, you just don't have the kind of cash flow generation from your other businesses to be.
Correct. Again, it's more about the sentiment right now rather than the actual numbers, because nothing in the numbers show that Oracle is slowing down, actually on the contrary. But it is about sentiment and trust and whether or not the market believes Oracle is going to achieve everything that it should be achieving. Listening to yesterday's earnings call, if you did not follow the story, you would think that they're full of shit. Pardon my French. But they are still crucial. They are still crucial. Again, the RPO, he laughed about this. Yes, contracted, but then again, it can be canceled. So that's something to consider. And a large part of it is OpenAI, which again does not have the money to support all of the $1.something trillion in commitments. You disagree, Oracle has massive debt, they are planning to go even more in debt. So you disagree on something that I agree on, or you disagree on something specific that I said? Because I think we can all agree that they don't have the free cash flow and they have massive debt. So where's the disagreement from your part? Then I did find the and look, they said there are various ways how they can raise money. Of course, along the way, they are going to recognize more and more revenue as the build out starts to take shape. But yeah, answer the question on what point you are disagreeing with me. Then I did find the local part. So it's up a little bit because Truist have raised their price target from 15 to 16. Wow. Incredible stuff, ladies and gentlemen. I'm raising my price target from 15 to 16. This is some crazy stuff. But the big move, I assume, jokes aside, the big move is just them going from hold to buy. The firm highlighted the positive impact of dLocal's new management team led by CEO Pedro Arndt, who joined from Melli in 2024. I'm like, good morning. Crediting them with successfully turning around the business and making strategic investments in products like Smart Picks, buy now pay later views, and stablecoin powered remittances. The firm views dLocal as an effective way to invest in cash digitization across emerging markets, noting the company's position as a pure play emerging markets acquirer and payment facilitator. Basically everything we've been saying. Basically. Then regarding, okay, Adobe, we've got all of these price target upgrades or changes. We do have a lot of lowering of price target, but it's still much higher than when we're at right now, right? The majority of them are at $400 or above $400 for Adobe. It's just them, the analysts, doing what analysts do every time. It's, oh, our price target, which was much higher before, is now maybe a bit too high compared to the price of the stock at the moment. And so, yeah, we have to adjust. We have to adjust our price. But yeah, all of them, I mean, we still have 3 buy ratings, a couple of outperforms, and the price target is all at 400 or above 400. So still a good thing, I would say. But yeah, there's no new analyst that came out that said, oh, we're going from hold to buy or something like that. Dragging down everyone is simply normal because Oracle is the deepest in the data center business. Oracle not being able to leverage the data center investment into more cash. Is it? Here. If Oracle can't make money from their investment, you know they're gonna go bankrupt, right? It's that risky. well, they can make money from their investment, and they are going to be making money on their investment unless we think they don't know what they're talking about. That's another story. But yeah, again, the reason why the neoclouds are also down is because of this, of course. But the difference in size here does matter, right? If you look at a Nebius, if you look at an Iron, if you look at a CoreWeave, size-wise, debt-wise, it's very, very different. Of course, they're all raising money to move as fast as possible to then start to generate a lot more revenue. But if you look at the timeline for some of these companies, it's not, oh, we have RPO of God knows how many billions of dollars that we will recognize over the next 5 years. No. For Iron, we've got targets for fiscal 26 ARR. Nebius, same thing, exit rate fiscal 26. So it's not like 12 months from now, we will be able to see whether or not things are moving in the right direction. CoreWeave, we have a $55 billion backlog to be recognized over the next, also between 1 to 4 years, you will see a large part of that backlog being recognized. So same, but different, but still same, but small difference between the small players and of course the huge ones, like an Oracle. I agree. So this is what we're getting from Oracle. No price target upgrades, but we do have quite a lot of price targets that are well above where we're at right now. Some of them, in my opinion, will still be changed, especially the $400 ones. But this is the picture for now. Then we've got PayPal. So PayPal, Bank of America Securities downgrades to new target to $68. Previously, they had $93 price target. So you might ask yourself, why do it now and not a month ago? Because the reason that we're seeing here is things that we've discussed. We've discussed that. I mean, that was discussed in the earnings call. That was discussed when Alex Chris spoke. And it was discussed again when Jamie Miller spoke, of course. So why reduce the price target today and not a month ago? Because a month ago, we were trading closer to $60, and you look like a fool when you have a price target of $93 on PayPal. So that's what we get for PayPal at the moment. Again, we're going into 2026 where it seems like every analyst has turned, I wouldn't say bearish, but has lowered the bar quite substantially, which would give them or would give PayPal the option to surprise them, and then hopefully we get some price target upgrades. But then again, wishful thinking. I know. Hope is not an investment strategy. I know. Then we have Shift 4. So complete opposite here with Shift 4. We have Freedom Capital initiate a buy and set the price target at $80, which is of course higher than when we're at where we're at right now, of around 16%. The analyst calls the recent pullback a buying opportunity, citing cross-sell upside and a strong M&A track record. And of course, in the meantime, this is also a company that will now be enjoying buying back shares at a lower price. We have, what do we see here? Sell Meta after the social media ban? No, not at all. Not at all. We're talking about the social media ban in Australia, right? Not at all. I still think Meta is a great one to add in the low sets. And Christine, thank you for becoming a member of the channel. Cheers, appreciate it. Lovely tea. We actually have here a Morgan Stanley comment on Meta price target to, well, they did cut it, but it's still $750, which is of course 15.5% higher than when we're at right now. Talking here about the next 12 months PE, went from 28 times to 22 times. Of course, Meta is also a company that is going to invest quite a lot of money. But now we have some cuts in the reality labs segment and all of that. Again, I'm not doubting Zuck. This is one of the only founder CEOs left. He has a great track record. He has not disappointed me just yet. My opinion on Microsoft, I mean, I don't own it, but it's still Microsoft. It's still going to grow. It's still Azure. It's an amazing company. It's, yes, trading at a higher multiple than some other Max 7 names, big deal, but it's also one that, I mean, is doing what it should be doing. It's growing across the board. It's a great business to own. Am I going to buy it? No, because I don't need it in my portfolio. Some Google ones here. Price target raised to $365 from Piper Sandler. Search gained ad budget share for the first time in 3 years. Strong return on investment. PMax and Gemini cited as key growth products, and multiples up 50% year over year, prompting estimates boost. Again, most of these analyst comments we already knew about a couple of months ago, whether it's Google, whether it's Micron, or even PayPal in some cases here. So we should not really be that surprised. We do have here one from Mizuho on Uber. Reiterates outperform and maintains a $130 price target on Uber, which represents over 50% upside from where we're at right now. Event focus, Dara did go to Japan, talk about some investments in the Japanese market. More specifically, I think I saw something with regards to Rakuten. Then key takeaways, autonomous tech drew most investors' attention, obviously. Topics also included Uber One, insurance and capital allocation, and Uber plans multi-year investment in Japan's large taxi and delivery market. Now, of course, we've all seen my mic? No, my mic is fine. I don't know, my mic is fine. We've all seen the talks of, or the results from Waymo. And so on the one hand, you have Waymo, which, yes, is autonomous vehicles. That's growing quite nicely. Some people directly say, oh, Waymo is growing fast, and so that must hurt Uber. But on the other hand, Uber just came out and shared some data of their own and showed that they're also growing very, very quickly. And so I just think that this whole mobility market is growing as a whole. Of course, Waymo is probably taking market share because it's new tech, it's very cool. But all in all, I think this market is growing. We've heard and we've seen actually from Shopify, where, let's see if I can find it. So apparently you can put Uber as one of the delivery options. Uber e-commerce is going to be quite big. It's going to be quite big because if you can put Uber as one of your delivery options, right? If you want something to be delivered super quickly, why not do it with Uber, right? Instead of ordering an Uber to take you from one place to the other, it will take your order from the store to your house. Another huge revenue potential for Uber moving forward. Disney invests $1 billion in OpenAI. Okay, let's try and find something about that. Interesting stuff. Voila. Thank you for the heads up. Appreciate it. So, Disney and OpenAI. Disney just announced an agreement with OpenAI for Disney to become the first major content licensing partner on Sora. Okay. Disney will make a $1 billion equity investment in OpenAI and receive warrants to purchase additional equity. Oh man, I was just about to talk about Disney in a video. But okay, more content. As part of this 3-year licensing agreement, Sora will user-prompted social video that can be viewed and shared by fans, drawing on more than 200 Disney, Marvel, Pixar, and Star Wars characters. Okay. Disney will also become a major customer of OpenAI, using its APIs to build new products, tools, and experiences, including for Disney Plus, and deploying ChatGPT for its employees. Okay, so let's think about it here. Yeah, let's think about it here. How does this work? Who benefits from this? What is Sora? It's the video generator from ChatGPT, like VO for Google Gemini. So Disney will make $1 billion equity investment in OpenAI. So if OpenAI continues to grow, Disney benefits from this. They are also giving ChatGPT the license to include Disney, Marvel, Pixar, and Star Wars into Sora. How does Disney make money from this? This is a head scratcher, because now let's say if I pay for Sora, which I don't, but let's say I do, I can start making small videos with Disney characters. And how is Disney going to make money from this? What? I don't get it. The only way they're making money from this is if OpenAI becomes more and more successful in the future, and then their equity investment grows. But what? But in the meantime, okay, maybe let's say Disney gets free exposure of Disney, Marvel, Pixar, Star Wars, whatever. But I mean, this also means I can create some stupid videos using Disney's IP, might be damaging the brand, which probably will. It probably will. I can already envision some crazy videos being made with Marvel, Pixar, Star Wars characters. But I fail to see how Disney really wins in this case. I mean, good move by OpenAI, right? Good move by OpenAI. This is the power of OpenAI. I guess they have such a pull that Disney is willing to invest $1 billion and give them access to their IP. If I ask, I'll ask Gemini, even better, because OpenAI is obviously going to be biased. Let's see. I thought you meant ask Sam Altman how Disney wins, but he won't maybe answer the question. Can you help me understand how Disney wins from this? We'll do thinking. Thinking is always better. Do I keep my investment in USD? Well, if I buy US stocks, it is in USD. But my cash is in euros, which means if the dollar is weaker, I can buy more with my euros. If I buy US equities, of course, if I sell my US equities and convert back to euros, then I would be losing. But I have no intentions to do that. At least not now. Okay. Okay, so one, they win by the investment. Basically, if OpenAI does become more successful, they win for it. They win. Okay, so Disney is licensing the IP to OpenAI, so I assume OpenAI does pay. Now, do they pay per AI credit, let's say, that gets spent on this content, or is there a specific deal going on? I mean, if every time let's say I will generate Mike Wazowski from Monsters Inc., every time I generate a video with him in it, Is that costing OpenAI? That's a good question. Wait, did we miss this? No, yeah, we did. I didn't read this. Okay, so point number 2 here is an interesting one. So the agreement will make a selection of these fan-inspired Sora short-form videos available to stream on Disney+. Aha. So now we're going to get curated, I would say, user-generated content to Disney+. Okay, that's one way. Another way for Disney to win from this. Okay, no, it makes a little bit more sense. Still not amazing, but okay, better than expected. So Disney is getting free content by users like yes, in a way, yes. Yeah, they're basically leveraging their IP, age-old IP, licensing those to OpenAI. OpenAI will pay Disney. I don't know how the deal, what kind of deal is structured there, but okay, they'll pay. Maybe every time I generate, maybe not, maybe a package, I don't know. And then some of the content does go into Disney Plus, which is user-generated, which means maybe people will be less inclined to churn. I don't know, but okay. Now it's a bit better. It's a bit better. Plus, of course, if OpenAI does become super successful, they have their $1 billion investment in OpenAI. Why did it fall a lot yesterday? Probably because the anticipation of this whole ACA enhanced subsidy extension vote. There is a vote coming on later today. I don't think it will be successful, so the market is basically front running that. What are my thoughts about Oscar today? Same as before. I still think, regardless of what happens with the enhanced subsidies, I still think they're well positioned from here on out. Do I think about the FX rate when I invest and buy stocks? I do not. I do not, because again, maybe when you trade, yes, but then again, it's not like euro dollars fluctuate by 10% on a daily basis. But you know, I do not think about that. Disney becomes TikTok? Nah, it's just a small part of Disney Plus. Just a small part of it. Okay, cool. Cool, not bad. All right, let's see what else we got here. Let's maybe refresh this page. And see. Wait, we do have. Well, why is nobody telling me this in the chat? We do have this. So initial jobless claims, 236,000. Estimated number was 220, and the previous one was 192,000. So that came out a couple of minutes ago. Not sure if the market really reacted to it, but in the meantime, we even have some let's say, analysts come out with some higher price targets here on Oracle, despite everything that's going on in the market, and especially with Oracle specifically. Did the pre-market change much? Not really. Not much. PayPal option Theta is eating out the value. Stock is just stagnant. Correct. I agree. So, Oracle, we do have 15 minutes. In 5-10 minutes or so, I'll do a quick recap of what's going on pre-market. So we have here a UBS buy rating maintained, $325 price target, cut by 14%, but still much higher than when where we're at right now. This $1 billion deal backlog conversion in the second half of fiscal 27. that is seen as a key upside driver. That is, we are now Q2 fiscal 26, so we still have some time with regards to that. This we just talked about, deal that really came out of nowhere. Interesting enough. Okay, more data on the labor market is, voila, this is the fuller picture on the labor market right now. Weak dollar is good for many. A weak dollar is good for a lot of companies that do business outside of the United States. So the Amazon, Mercado Libre is, it's good for them because remember at the start of the year, the strong dollar was a headwind for a lot of these companies and suddenly turned into a tailwind. So yeah. Any thoughts about China Vice Commerce Minister meeting PayPal executive? First time I'm hearing about this. First time I'm hearing about this. Where did you see this? Ah, yes, indeed. China's Vice Commerce Minister and Deputy Trade Representative met with PayPal's Global Vice President Richard Nash. Cool. Is this going to move the stock? Probably not. Probably not. But PayPal slowly but surely is making some moves. Not the stock, but the business is making some moves, that's for sure. We are also waiting on that thing with regards to the NFL. We'll see what happens. Buying Melly at these prices, let's actually have a look. Let's actually have a look at some of the names. So, Oracle, let's start with Oracle real quick. Oracle is down 13.6% at the moment. Meta is down. We are basically feeling that small gap right here. So that's fine. Tesla is down a little bit. Amazon 0.4. Microsoft also continues to go down a little bit. The 200-day moving average sits at $471, so $4 lower. Google still in the same range. Then we've got Apple and Netflix. Someone asked me about Netflix. My thoughts on Netflix if Warner Brothers shareholder approved them as a buyer. I mean, I've seen Joseph Carson's video on it yesterday. His thoughts on it. I think he bought more Netflix. I agree with him. I agree in the three scenarios. Netflix is a buy at these prices. Me personally, again, if I were to open a new position in my portfolio, previously we talked about Salesforce, Adobe, but I didn't know I get the chance to buy maybe a Netflix like this. Netflix would probably be at the top of the list right now. I'm not going to open a new position, but it is very tempting. It is very, very tempting. But yeah, that's just my opinion on that. Then Fintech, we have Hood that's down 1.8. PayPal also down 1.8, just at $60 here. Pagaya is still around $24. Bull, clearly it's not that bullish, remains just under $10. Then Affirm is at 70. Block 63, down 0.7%. SoFi down 0.6. Did rebound yesterday on that 100-day moving average. I think SoFi again will do extremely well in 2026 and onwards. Klarna down 0.4. Sezzle 0.5, still above that 50-day. Chime yesterday had a great day. What happened yesterday? And we had a new initiation. That's today. American Express is flat. Nu is up 0.6. Dave is up 0.1. MasterCard 0.4. Shift4 is up only 0.7 despite a new analyst coming in with a higher price target. Visa is up 1.3 and dLocal 2.1 also on an analyst note. CoreWeave sits at $83 right now, down 5.4%. Nebius is down 4.3%. Applied Digital is down 3%, Iron 2.7, Cypher 2.8, Hut 3, and White Fiber is down 2% here at the moment. Then we've got all of the chip names are down. Nvidia is back at 180, AMD back at 217, down 1.5%. Marvell is down, TSM 1.4, Intel, Broadcom report later today. They'll probably say something. We'll see if all of it is price target, is priced in. Micron, Qualcomm, Lam Research all down 1%. CLAC is down just under 1%. Same with Applied Materials, and ASML here sits at 1,100. What is it? Dollars, because you can buy it in dollars and euros. Then Mercado Libre is under $2,000. So I have it in my in the retirement portfolio. It is indeed very, very tempting. It is indeed very, very tempting. Melly and Amazon alike. Of course, Melly market cap wise is much smaller than Amazon. I do think that just Amazon is also just disrespected right now. But Melly, yeah, Melly under 2,000, I might just add one or two shares or so. But yeah, it is indeed. If I didn't own it, I'd probably jump on the fact that I could buy it right now. But I do own it. I've owned it for a while, and yeah, it's a very, very good company. Very good company. Maybe the sentiment or the momentum is not with them, right? Because they are still down from the peak from back in June. They're down 25%, but I don't care. I don't care. This is a company that executes very, very well and will become bigger and bigger in the future. For me, no doubt about that. Same with Nu Holdings. Of course, Nu has had a nice rally over the last couple of months, but this one as well is going to become bigger and bigger if they continue to execute the way they've been executing over the past couple of years. Melly needs a split. It could definitely use a split. Makes options cheaper as well, and just buying shares cheaper, yes. Unless you have fractional shares, then it doesn't really matter much. I did cover it, yes, of course. We have more pain. More pain for more gains. What gains, you ask? I don't know. Let me dream a little bit. Those in PayPal are wasting their time and money. Well, again, it depends. It depends, because if we fast forward, I know a lot of people think that fast forwarding 2-3 years into the future is way too long to hold a stock. But if 2-3 years from now, maybe 4 years from now, this stock is above 100, 200, maybe close to $300. $300 is the peak before, but they will have way less shares. So it's not going to be the same thing. I think it's worth waiting. And yes, in the meantime, you are getting your dividends, which we all got yesterday. Sacré dividend. But yeah. Aren't there better opportunities? There are for sure better opportunities in the short term. But again, risk reward wise for me, especially if we think that the markets might be overvalued, all-time highs and all of that, it is still extremely undervalued and detached from reality. Now, I admit there are some things that I wish would have gone better for PayPal. I think could have been communicated better, but there are definitely way more positives today than there were 12 months ago, especially at the start of the year. And the company today is a better company than before, and it's trading at 35% less. But the options on PayPal don't make sense now. Well, I think options in PayPal do make sense now. Unfortunately, I already have my options, which are all red, but the majority of them are anyways for 2027. But yeah, you can buy 27. You can even buy 2028. I don't think the premium is that high at all right now. You don't have to buy it. I bought it because I feel like it is going in the right direction and I feel there is a disconnect. I was wrong on my timing, although a month and a half ago I was very, very right on the timing. Just the market took a dump and it brought everything down. So yeah, you don't have to buy it. I agree. You don't have to buy it. There are way better stories out there for the short term, for sure. I am just, for someone that has been looking at this business and studying and looking at every word that they've been saying, I see a disconnect, a huge disconnect. Even with the current branded checkout struggles, this stock should be worth closer to $100 per share. That's it, today, even with the branded checkout struggles. But the market doesn't believe, so okay, fine. The market also didn't believe a lot of things before, and suddenly in 2 months it did. I'm not going to give the example of Google because it's completely different story. I'm also not going to give the example of Meta 2022 because that's also a complete different story. Nail, in 3 to 4 years, the world will be totally different. Correct, and PayPal is also going to be totally different because for once, they're actually trying to front run what's happening. For once, they're actually trying to innovate and disrupt themselves, and I'm happy they're doing it. But I agree that in 3 to 4 years, the world will be totally different. I'm betting on it. I am betting on it. It's an eternity, but fine. But look, I'm an investor that I don't care. I'm not looking at what happens in the next 12 months. I am investing in companies that, some of the companies that I do buy is purely for a short-term trade. I admit it. That's also my explanation. That's what I say. I am buying it for the next 12 months. But most of the companies I'm buying for the next couple of years because I see a solid trend, and these companies with the right management are going to make the company worth way more in the future. It's what happened over the past X amount of decades and years. So I'm not going to change my way of thinking right now. And if there are companies where you're looking at it and you're like, I'm not so sure that in 3 to 4 years this company is going to be super competitive or whatnot, then maybe you shouldn't buy it. We have almost a minute until the market opens. Which stocks in your portfolio do you like the least? Would you consider switching it to Netflix? It's not which one I like the least. It's maybe ones where I've made enough profits and I might just take a lot of profit or close out the position because suddenly, poof, I like this story more. If you need a name, Micron, I've made a lot of money on it already on paper. I could be taking some profits. I don't think I would like to close out my position from Micron right now because they still have quite a lot of money, but momentum, but profits, why not? And then maybe Alibaba could be the company that switches for Netflix, despite me saying and still believing that Alibaba is a solid hold for me in the portfolio because it is very, very cheap. Very, very cheap. But yeah, you asked the question and this is just my way of trying to answer it in a good way. So yeah. Markets are about to open in a couple of seconds. So let's prepare ourselves for the market open, ladies and gentlemen. Ding, 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 bing, bing, bong, bing, bong. Markets are open. It is Thursday, December 11th. The markets are open. We're a bit all over the place at the moment, so we'll let the market do whatever it wants, but we are open. Isn't Micron forward PE still low? It is still low, and it will always be low. It will never really trade at a super high PE at the moment. RZLT, no idea what that is. All right, let's see what we've got. Let's see what we've got right now for you, ladies and gents. Let's start with some red because we have a lot of red. We have a lot of red. We have more red than green. Although we have some surprising green names, I would say that. Red is bad, yes. Red is not good. Unless you're looking to buy some deals, then red is good. So, Oracle is down 7. Oracle. Oh, mon Dieu. CoreWeave is down. Too much Oracle in my mind. CoreWeave is down 7.7%. I'm like, one does not simply walk into Mordor. CoreWeave is down 7.7%. Nebius down also 7. BMNR down 6. Hood down 5. Wow. Hood down 5. Probably because of the monthly results yesterday. Applied Digital is down 4. Iron is down 3. AMD down 2.6. Pagaya 2.4. Actually, we'll go category by category. That's maybe better. Let's do category by category. So, Hood down 4.5, Pagaya 2, Bull 2.2, Affirm 1.5, SoFi 1.2, Klarna 1%, PayPal 1%, Block is down 0.5, Adyen, Chime, and Dave 0.2 to 0.3, Shift4 is flat. Then we have American Express that's up 0.3, same for Nu, dLocal is up 1, MasterCard is up 1, Visa is up 1.4, and Sezzle is up 3% for the fintech names. As for the neoclouds, we've got reds across the board. CoreWeave down 7, Nebius down, let's call it 7 as well, we'll give them an extra. Applied down 3.8, Iron 3, Cypher 2, Hut 8, 4.6, White Fiber 5%. Chips are also down across the board. You can all thank Oracle for that. Nvidia is down 2.3, AMD 2.8, Marvell 1, let's call it 1%. Same for TSM, then Micron as well, Qualcomm. The rest is down around 2%. Intel, Broadcom is down 3% right now. Lam Research 2.7, Applied Materials 2%, so not great at all here. As for the big tech, my God, big tech, Oracle down almost 16%. This is a meme stock. Meta is down 1%, same with Tesla, Amazon 0.6, Microsoft basically flat, Google down 0.2, Apple flat, and Netflix is up 0.3% at the moment. As for the other names that are green, actually, so Sezzle is green, Oscar is green, 2.5%. Yesterday, Oscar took a hit. There is a vote going on today around this enhanced subsidy thing. We'll see what happens with that. Novo is close to $50 yet again. dLocal is up, Mercado Libre is up 1.1%, dLocal is up 1.5%, back to $200. United Health is up 0.8%, and then we have Rocket Lab that's flat-ish. Nu is up 0.4%, CRM is up 0.5%, and we do have Adobe that's up almost 2% right now. Makes sense. Makes sense. It made sense for a long time that this thing would start to move, but shall we look at a couple of charts here? So we have Adobe going up a little bit, deserved, I would say. Deserved. Again, the numbers were good. I did see here a good comment on the AI credits for Adobe. Where is it? Where is it, precious? Here it is. So generative credits consumption did increase 3x quarter over quarter for Adobe. So that's good. Total new AI inference ARR exceeds 1/3 of their overall business as they integrate AI deeply into their solutions and continue to launch new AI offerings. And then, we had the announcement yesterday that they launched Adobe Photoshop Express and Acrobat for ChatGPT. Directly inside of ChatGPT. Okay, so that's good. Pa-pa-pam. Let me check the chat real quick. I forgot to close the poll. Voila, closed it now. So you cannot manipulate it anymore. All right. 56% of you say we are going to end the day red, 28 green, 16 flat. Okay. So, toujours la même chose. Duolingo. Again, this is again a battleground stock, but every time we talk about battleground stock, I don't understand the people that always need to counter it. If you don't like it, don't buy it. It's that simple. It is still a high margin business that is still expected to grow very nicely earnings and free cash flow over the next couple of years. It is of course much cheaper today than a couple of months ago. I have already admitted it that when I opened my position, I opened it too aggressively, and of course I am taking a hit. I could be buying today, or I could have been buying over the last couple of weeks and lower my average, but I do not want to put more dollars into that position. I have my position. I am in red, 40%, I think. And now I'm willing to wait and see how it plays out. I am putting my cash to work in other positions, right? The rubrics, the shift fours of the bunch, because, and then even be buying so far, it keeps dropping. But yeah, Duolingo, purely as a company right now, it is attractive if you believe in the thesis. If you do not believe in the thesis, forget about it. Just click on delete and don't look at Duolingo. Then Rocket Lab. What do we have? Rocket Lab here, $57. I mean, the recent reaction here is very heavy. It's a mix of SpaceX IPO 2026, neutron developments, plus data centers in space. So it's a mix of all of that. I'm not selling a single share of Rocket Lab at the moment. Would I be chasing today? Probably not. Probably not. Again, just my opinion, just my situation based on my allocation on the portfolio. That's basically, ooh, look at this. We have a PayPal that's green for now. Now that I said it's green, it's probably going to be red in the next 10 seconds or so. But yeah, NeoClouds. Look, I have been adding to CoreWeave, Nebius, and Iron over the past month. So I'm not in a rush to continue to add more and more. In Nebius, if we do go back under or close to $80, then I will be buying. But today I'm not in a position where I need to start chasing these names right now. I have all three. I mean, for Nebius and Iron, I have a very, very nice average. For CoreWeave, I am down a little bit. My average is now, I think, $89 or $90 or so. But I'm happy with what I own with regards to those names. We are seeing a very nice reversal, so maybe it's worth pulling up the heat map right now. So we are seeing suddenly more green overall. Sezzle is up 6%. I don't know what's going on there. Maybe it is because it has a very high short interest for some strange reason. Why isn't PayPal being bought like crazy? You're asking the wrong person. You're asking the guy that has been screaming at PayPal and retweeting and tweeting and posting to Alex Chris for the last 2-3 months or so that they should be accelerating the buyback. So you're asking the wrong person. And then as for a hoodie, you don't understand what I see in PayPal. Again, I've made enough content on PayPal explaining my reasoning behind it and the thesis, etc., etc. If you don't like it, don't buy it. It's very, very simple. I just see it as a business that's priced for zero growth and actually We've done a DCF with Emir, and we've seen that the price today, based on very conservative metrics, it's priced for negative growth, not 0 or 1%, but negative growth. Even if you do a reverse DCF today, you will see that it doesn't make any sense. Because it is a business that is generating a lot of free cash flow. It is growing. It is going in the right direction. It's true that some, especially the branded checkout, the adoption is taking more time, but it has more to do with the customers that adopt PayPal, older tech, than it does on PayPal's tech. Because PayPal's tech, they showed us, customers have told them, look, the new one is much better than the legacy system. The new one makes sure that there is more money flowing towards us. Conversion rates are much higher. So we know that the product is better and it works. It's just that the adoption of the new product, going from this super old, bad legacy PayPal system to the newer one, is taking too long. But Venmo is growing and actually being monetized very well. The buy now, pay later business is growing and being monetized very well. Stablecoin, the market cap is now above $4 billion or so. It's still far away from Tether and USDC, but it is growing. Agentic commerce, that's going to be a big thing, and PayPal is finally is positioning themselves quite well with that. So that's good. Braintree is now not a money-losing business for the sake of growing. It's actually growing, but growing in a profitable way. Other value-added services is also growing. I expect this to be $1 billion business per quarter, probably at the end of 2026. So things are moving in the right direction. Maybe I should be a spokesperson for PayPal because they are definitely not doing a good job. They're definitely not doing a good job at telling people, the markets, investors, that there are way more positives today than negatives. And that's the messaging problem that I've been talking about for the last couple of weeks. Yeah, I don't know what specific things you've used, but I'm not far from that, yes. And they're not going to experience negative growth. We can be certain about that. All right, actually, let's have a look at the VIX, because I'm pretty sure the VIX is having some fun today. Sacré VIX, or not. It was having some fun. Now it's not so much anymore, which is strange. Which is strange indeed. But what has happened with Sezzle? Why is Sezzle up again? Let's see if we can find some sizzling information. Because we know that they got included in the S&P Small Cap 600. But since then, nothing. But yeah, the VIX is strange that it is so low at the moment. Let's see. No, couldn't find anything. Could not find anything here. Let's see if we got some other news. Eventually, PayPal, I mean, they are definitely profiting from it because they can buy a hell of a lot more shares at these prices. I just, for the sake of my sanity, I just really hope that in a month and a half from now, when we are going to get the next earnings report, we're going to see that they have actually bought way more shares than usually. And if not, then it's a big F up from management. Uber. Where is Uber at? I think this was the same price I've added the last time, no? I mean, Uber is also very cheap. If you from a forward PE standpoint, even from a trading PE, it's not the craziest of valuation. So last time I bought Uber was, yes, last time I bought Uber was also at $82. I could add more. My average is anyways $65, so I could be accumulating more shares with it. Lemonade broke out. It's in the 70s, no? I think last time I checked. Wow. It's now actually $81. Incredible stuff. Did we have something here? We did not. Yeah, last earnings report was a very good one. Stock jumped 35% on one day. So $81. Any specific news? Any specific news regarding Lemonade for this little bump? Uber faded. Yeah, Uber. I mean, Uber will always, the stock will always fade every time we do have some autonomous vehicle news that comes out, whether it's Waymo or something else. Will always be the case. But then on the other side, like I showed you yesterday, they reported. Actually, this is what I wanted to show you before. So this is what I showed you yesterday with regards to Uber. So last week, Uber and Uber Eats, they crossed 300 million trips in a single week. That's 900,000 trips every 30 minutes. So they continue to grow despite Waymo growing. It's not Waymo grows, so Uber doesn't grow anymore. It's 900,000 trips every 30 minutes. Then, this is what I wanted to show you before. So Shopify, they announced basically that Uber Direct just dropped in the Shopify App Store for fulfill online orders in store for same-day local deliveries. It's another revenue stream here for Uber. Same-day or scheduled delivery directly from Shopify merchants' online store powered by Uber's network, keeping the customer connected to their favorite merchants' own brands. It also allows Uber drivers to generate more revenue because you're not driving people, you're now driving packages. You might also be driving people and packages, so double the money. Right? You go pick up a package, and on the way to the person's house, you are maybe also delivering a human. It's not a human trafficking. Don't ban me. But good move. Why is Uber's earnings expected to fall next 12 months? I believe probably because there were maybe some one-time things that they benefited from. I am lagging. Am I lagging? I don't know. I didn't change anything. If I'm lagging, let me know. But if not, then maybe it's on your end. But I didn't touch anything on my end. So if I am lagging, do let me know. We might figure it out. Although I anyways have to go in a bit. But there is a video coming out in 12 minutes. I'm not lagging. Okay. That is good. That is good to know. So, let's see. Greens, voila, like I said, PayPal is back in the red, where it likes to be. Okay, so something did happen. Something did happen now with the screen. I don't know who jinxed it, but it is fixed. It is fixed now. So, what does PE matter, and what is it, and the purpose, and why do investors look at? Well, PE is price to earnings. It's a metric that you use to see the pricing of a certain stock you want to buy. and then compare it to, let's say, the norm of the industry or the norm of the market and see if it's expensive or not. But a PE, a trailing PE, is based on the past earnings, forward earnings of a certain company. The forward one is based on analyst expectations. It's just a way for you to look at a stock and see whether or not it is more expensive than, let's say, the 10-year average of where it was trading at. But it doesn't tell you the full, it doesn't tell you anything. It's just one piece of a big puzzle. You can look at a PE. Then you have to go and look at, okay, has this company traded at a higher PE previously or not? And if yes, why was that the case? If the case was that, okay, previously they were growing faster than now, then okay, you can understand why it should be trading at a higher premium. But it doesn't tell you the full story. Plus, price to free cash flow is probably better, but then again, not every company is free cash flow focused, but it's just one of the metrics that you can use. Ferrari thoughts on the stock or on the F1 team or on the car? Well, which one is it? On the stock, it is. I'm not that surprised that we're here. It was very expensive there. I did make a video I think maybe almost a year ago now. Well, that's crazy. Where I said this is one of those names where you'd like to own it, but only if it became much, much cheaper. And it did become cheaper. But do I need to own it? Probably not. It is again one of those businesses where you know that the margins are quite high because, well, they sell their vehicles at a big premium. But yeah, actually, let's have a quick look. Let's have a quick look at Ferrari. So even now, you see, if we look at the PE or forward, even forward or trailing, still in the low 30s. But the margins for this type of company is quite high. It's quite high, which is impressive. Impressive stuff by them. Let's see. So yeah, cars. Yeah, it's growing okay, I would say. So we've got some shipments, total shipments. Maybe annually is better for this metric. So total shipment last 12 months is just 1% growth. So definitely, it's been flat for 3 years. Previously, it was growing a bit more, right? Again, ask yourself, do you need to own it because it's Ferrari or not? Okay. Are we seeing? Yeah, we're seeing a little bit of a pullback. We were very surprised that some names suddenly became green, so I'm not that surprised that some names are becoming red. And Rubrik is just, it had a big reaction here after the earnings report, and now it's basically back to prices not seen since Monday. It's not such a big deal. VIX is now up 5%, so that makes a bit more sense at the moment. Let's see, what do we have here for comments? You first discovered the rubric through my analysis on the gap growth deep dive. The other day I had an interview at the company. Congrats. Congratulations. Hopefully you do get the job. Yeah, gap growth, great stop stack, great follow on X for sure. Nebius is down. Question here: where are the moderators? I don't know. I don't really have. I think I have two moderators, but I don't think they're here right now. So yeah, keep it civil, please. Robert was just asking a question. Maybe it's possible that I was lagging. I don't know. So please, no need to attack anyone here just because my audio might suck, or might not suck, but might sound like it sucks. But yeah, some names are pulling back, some others are green. We are surprised. I am surprised. You are surprised. Bull trap. All-time highs next week. Well, next week we have CPI report, so I guess that's a big week. That's a big week. And yeah, I mean, I'll end by saying what this guy is saying, or this girl, although there is a very, very small chance that it is a girl, because only 6 to 7% are women watching the channel. Unfortunately, high beta could drop 50% just as easy as it doubles. Correct, which is why we've seen the high beta names drop 50% over the past month or so. This is exactly what has happened. And as I've explained in previous videos and live streams, you shouldn't be surprised, right? If you're getting a 200% return in a couple of months, you should not be surprised if you're suddenly getting hit with a 50% pullback in a couple of weeks. So with that said, I do want to thank you all for joining me this this Thursday market open. There is a video coming out for you guys in about 3 minutes, explaining the whole data center in space situation, NeoClouds, Oracle, because I do know that a lot of you or a lot of future people are not joining the live stream. So the video is going out in 3 minutes time. Thank you all for joining. We shall be back tomorrow morning, of course. I don't think I'll do the Broadcom earnings later today. I'm a bit tired, and I do want to do some other things than just look at stocks for now. So we shall see each other tomorrow morning. Have a great rest of your day. Bye-bye.